The social media giant and artificial intelligence company Meta Platforms is scheduled to report second quarter 2025 financial results after the stock markets close on July 30th, 2025. Investors want to know if they should buy this stock before the company announces earnings or wait until after the earnings announcement to buy this stock. They also want to know if this stock is a buy at all, whether they should be buying before or after earnings. I'll answer all of those questions here in this video, but I'll also preview what investors should look for from the company in the upcoming quarter, the big items you need to know from the company. As soon as you open up that financial press release, these are the things you should be looking for. I'll point them out to you. I'll share with you my proprietary discounted cash flow valuation model, which calculates a fair value for the stock today. And we'll look at the forward price to earnings to look at if the valuation is attractive to buy this stock before it announces earnings. I'll do all of that in this relatively brief video, so let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So Meta Platforms last updated investors on April 30th, 2025. And this was for the quarter that ended March 31st, 2025. It typically takes a company roughly a month, sometimes a month and a half, to gather all the information from the completed quarter and then report them to investors. That's why typically they will report earnings about 1 month or 1.5 months after the quarter is completed. So in this quarter that ended March 31st, Meta reported revenue growth of 16% to 42.3 billion. Of course, the company generates nearly all of its revenue from advertising. The more people on the platform, the more time they spend on the platform, is more opportunity for Meta to show advertisements and generate revenue. This is a very lucrative business model. The content that goes on Meta's platforms, the company doesn't really have to pay very much money for that content. People like yourself and myself go on the platform, post images, engage, make comments, interact, use the website, look at videos, and all of that is opportunity for the company to generate revenue. It's all user generated content. And unsurprisingly, at this large of a scale with over 3.4 billion daily active people, the company generated an operating profit margin of 41%, and that was up from 38% in the same quarter last year. That's an attractive operating profit margin. I would say a really strong operating profit margin that would be the envy of 95% of, if not 99% of businesses in the world would envy an operating profit margin of over 40%. So one of the key things you need to see from the company when they report results is their daily active people. As of the most recent update, they had 3.43 billion, and that was an increase of 6% from the same time last year. So 6% on a base of over 3 billion means over 180 million new users came onto Meta's platforms over the course of the previous 12 months. That's very solid growth. I mean, the growth in Meta's daily active people is more than some social media companies have overall in their entire history. They're able to add this many users in just 12 months. Almost half of the planet has an account with one of Meta's platforms. It has massive scale, and that's very attractive to advertisers who can reach so many people in just one place, right? That's attractive because the time it takes to set up advertising campaigns and set up targeting, etc., you can do it all on just Meta, and that'll be enough. You won't need to spend any more time on any other platform because you can be reasonably confident that all of your customers or 95, 99% of your customers, your potential customers, have an account on Meta and spend time on Meta on a weekly, if not daily basis. So you can just advertise with Meta and reach all of your potential customers. The company increased the amount of impressions, advertisements it delivered by 5% year over year. And this is an indication of both an increase in the number of users and also an increase in the time each user spends on the platform. The average price per ad also increased by 10%. That's truly impressive. Not only are they delivering more inventory, so inventory is going up for advertisements, but the price per ad went up even more than the inventory went up. And that's truly impressive. That's a clear indication of strong organic demand for its products, and its products is advertising inventory. And not only are they showing more ads, but the price per ad is increasing. Remember, this is at the discretion of the company, right? They can show more ads if they want to. They don't have to stay at the pace of advertisements that they're showing right now. Right now, it's not very annoying. I use its platforms often. I would say on a weekly basis or every other day, I would say. I'm posting videos on Instagram Reels. And so when I'm, looking around and using the app, I'm not seeing too many advertisements. It's not to the point of annoying me. And so there's room for the company to show even more advertisements if it wants to. They have to balance that, right? If they show too many, then people will not like the experience and will not open the app as often if they're getting annoyed every time they open the app. And so it's at their discretion. And if the average price per ad is increasing, that means there's room for them to increase the number of ad impressions and balance that with the price that they're receiving. It's an attractive business model. I've liked this business for several years now. I've had it rated as a buy for several years. In fact, I believe I have all of the social media stocks rated as a buy, including Meta, Snap, Reddit, and Pinterest. I have them rated as a buy because the business model is so attractive. The user-generated content business model is an attractive one, and the industry overall is attractive for investors. All right, one other thing I'm keeping a close watch on is the company's headcount. Meta's been aggressive in hiring talent to expand its artificial intelligence capabilities, and it's been spending significant sums of money building out the data centers optimized for artificial intelligence. I'd like to see a more moderated increase in this headcount, 76,800 as of March 31st, 2025. I would like this number to remain below 80,000 when they report quarterly financial results. I would like them to be able to do more with fewer people, aided by all of the investments they've already made in artificial intelligence, to be able to get more productivity out of each employee rather than increase the headcount aggressively going forward. So second quarter revenue is expected to be between 42.5 and 45.5 billion. I would expect the revenue to come in this range. I haven't seen very much data to suggest that it should be out of this range. Uh, I'm not even leaning towards the higher or lower end of the range. Things have progressed relatively as expected for the advertising industry over the previous few months. There were some concerns as a result of the increase in tariffs, but we haven't seen too much in terms of activity in the advertising industry just yet. We're starting to see the early pullback in spending on some businesses, on capital expenditures, and on inventory. We haven't yet seen too much changes in activity in the advertising industry as a result of the tariffs, but that could change in the upcoming quarter when companies like Meta and Alphabet and Pinterest and Reddit and all the ad businesses start reporting results. We'll start to know more about the impacts of tariffs on the advertising industry. They decreased their total expenses expected for 2025 down to a range of 113 to 118 billion. I would like to see them remain in this range or to lower it even further. And then for capital expenditures, they increased this to 64 to 72 billion or 68 billion at the midpoint. That was up from 62.5 billion at the midpoint, so a 10% increase in capex at the midpoint. Selfishly, I would like to see them increase that number because this money is mostly going to NVIDIA and AMD, and NVIDIA is something that I own in my portfolio. So if Meta Platforms increases the number they're spending on capital expenditure, that means NVIDIA's revenue for this year will likely be better than previously expected, which would be good news for my portfolio. So selfishly, I want to see them spend more in this category. In terms of Meta's business, will this be good for the company? I think so, yes. I think they're seeing such a strong return on invested capital in artificial intelligence that if they're spending more money, it's good news for Meta investors also. It means they're able to get their hands on more capacity. All of these companies, Meta, Microsoft, Alphabet, Amazon, that are spending on artificial intelligence are telling investors like we would be spending more if we had the ability to buy more, but it's sold out. The things we need are pretty much sold out. We don't have the ability to spend more, otherwise we would. And so if you see Meta increasing their outlook in capex for this year, that's good news because they found a way to increase the amount they're able to purchase and thereby generate that strong return on investor capital on those purchases. So my proprietary valuation for Meta Platforms has the business worth $688. The current market price is $704. This is close enough where I say it's fairly valued. It's a fairly valued business at the current market price. And similarly, when I go to fiscal.ai, which is my preferred data source, they save me so much time. I love using their service. There's a link in the description if you're interested. It's trading at a forward price to earnings of 27.5, which also looks fairly valued to me. Now, what I say very often with businesses like Meta Platforms, I rank Meta in that category of Hall of Fame type of business. It's a phenomenal business. And when I can buy a phenomenal business like Meta Platforms at a fair price, I am always willing to rate that business as a buy. That's the situation I find Meta in right now. It's a great business trading at a fair value. I have the stock rated as a buy. Should you buy before or after earnings? Since it's fairly valued, I don't see any big reason to buy before earnings to lower the risks of missing out and lower the risks of the downside. I would say half before earnings and half after earnings. I know I say that a lot, but it's because a lot of situations warrant that recommendation, and this is yet another one of those situations. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.